Welcome to Markets Now. I'm Michelle Rook with Scott Varilek of Kooima Kooima Varilek, and we're seeing some mixed trade in both grain and livestock futures this morning. We're going to unpack this for you, folks. Thanks for being back, Scott. You go away for a week and you come back with a beard. I can't keep up with you guys.
Yeah, sorry about that. Hunting season and all of that going on. So it changes fast.
I was going to say it's not November, so you can't say no shave November. But
right.
Let's talk a little bit about the cattle market because we had a couple of down days. We did not look very good on the close yesterday from a technical basis. We're trying to recover today. What's your thoughts about recovery here?
Yeah, and thanks for having me too. And it feels like, okay, we had some technicals. We can start with that. We're in a little bit of rough shape. I mean, it was an overbought market. We've got the funds that are really long. Just a few days ago, we had a key reversal lower on the feeders, and those have showed a little bit of correction after that happens. And that happened on the board. We broke some uptrend lines on the live cattle. I think that's why they picked up the pace to the lower side. Just on some of that technical news and some of that pressure there. So when I look at that puts a little bit of scare out there, but I think fundamentals are just staying strong enough that we can try to recover some of this market here, and it's already starting to shake it off on a Friday here. So not feeling scared. I don't think there was a bunch of traders coming in saying, quick sell if these charts look bad. Hey, I still think the fundamental news is trumping what's happening there.
Yeah, and the biggest part of that fundamental news, Scott, is the fact that the cash market feeders are on fire, and it looks like we might have a higher week here for Fed cattle trade too, right?
Yeah, feeders are on fire. I just think that's the key thing. Feeders are the leaders, and that was the one market that needed to lead us out of some of the corrections that we've had, and it's doing it again. It's every day you're hearing about a group of cattle that sold at this price for this, and I'm getting my phone's blowing up from them, and new records every day it feels like, and some of these break evens that are looking like possibly 205 to 210 on some break evens on some feeder calves that guys are really wrestling over. So it's just proving the need that they want these cattle. And I think there's a lot of reasons, why these feeders are this high. Yes, tighter supply, tighter cow herd in general. You've got a Mexican border that is shut, but it's in the north. These northern feeder auctions are the ones that are just so red hot right now. And I think there's some other reasons. There's a lot of feed up here. These producers are sitting on quite a bit. That's how they market their grain, their hay,
right.
Whatever it is, what have you, from the previous year. So they've got all this feed. They need cattle. The key is ownership right now, and they feel that way, and they need to have that ownership. So really wrestling over themselves to try to get them.
Yeah, you and I have said at those sale barns before, though, and it just seems like there's sometimes when those order buyers, they will go to any length to get those cattle because you got feedlot guys that just will pay anything for them, right?
Well, I guess for me, when you have a cash market that's trending higher, I guess, you get some order buyers that buy some groups of calves. They might not have a home for them right away, and then the market goes higher. They get bailed out on the group behind them. They can market those. So then they just keep that ball rolling, making money on those calves on the way up. It's always that last group or two that you don't make money on, and that's fine. You made a lot of money on the ones behind you. So could be some of that. I think everybody's trying to ask around who's really behind buying all of these calves, and I'm surprised that I'm seeing some of these farmer feeders that are in the line of that. So yeah, my phone's blowing up wondering how are we going to market these? How will we protect these? So it's tough. I got a mid 180s across the board here, and we're looking at break evens that high. It's going to be tough to do. I don't know if there's the right answer there, but so it's going to be wild, going to stay wild. But I guess when we see feeder prices this high, it's telling me confidence there. And then the live cattle cash side, that's feeling pretty good as well. We got right back to the 190 bids by several packers this week after they bought real hard last week. So I'm surprised to see them jump right back in. With that, I think there's some guys asking higher. There's been some 192 passed as well. There was a little bit of leaking yesterday with some of the downboard, some 190, some 295 to 297 with some grid premium. So, I mean, there was some cattle moving, but not a big bulk. So I think there's still guys hanging out asking for higher prices here.
Okay, so the couple of things that we've talked about that have or could spook the market, plant closures, which we've already talked about that earlier this week. Let's talk about heifer retention. That's another one that keeps kind of, brewing in the background, but it really doesn't make any sense at this point, does it? This heifer retention?
That's how I feel. And that's an excellent question, because I think we were seeing, the last cattle on feed reports, we saw, okay, there's a slight shift towards maybe some heifers coming back to the cow herd. But now if you look at it right now with these feeder prices just blowing up, you're going to spend $2,000 on a heifer calf right now, and you're going to have to feed her through the winter. You're going to have some pasture next spring. You're going to, breed her. Then you're going to feed her for another winter, and then you're going to have a calf with a lot of debt on this already. And you're not going to get paid on anything from that heifer for a couple of years down the road. And at, now 7.1 to 7.3 interest rates that you can get from your bank if you're arm wrestling a little bit. That's a lot of money to shell out there, and it's making it very hard. So I would feel like it's looking like I would want to bring those heifers to town again. That's a big paycheck to try to pass up. And you mentioned the plant closure. We saw that. Okay, a plant's closing, market gets scared, moves down. Turns out it was just a manufacturing plant. We're okay. But when the market's on pins and needles like that at a high price, I think you're wanting to take those heifers back to town again. I think you're wanting to cash them in. It's going to create another problem. We're not going to see a mass quick rebuild like we did in 2015 with the high costs all around us of everything else. I think it's looking like you want to cash them in.
The other thing is we get some rumors about when the border is going to open to Mexico. And obviously we're anticipating that could, cause a little bit of a correction. What are you hearing about how soon that could open?
Yeah, for me, I think the original diagnosis was, down for 2 to 3 weeks. And I still think I'm in that camp. So I feel like the market's kind of penciling that quite a bit into the market already. I think we know that those calves are going to come eventually. They're not disappearing. They're still there waiting, and it'll just be a little bit of a catch up. It might just make some holes here and there, but general consensus that it's going to get reopened. I hope it's not a shock factor when it does, because I don't know which government officials are going to know first. Somebody's going to know before I do. The board's going to already be down, and we say, okay, this must be the Mexican border trade. So it's unfortunately going to be hear about it after the market's down, but I don't know that it has to be this large. Okay, the market's done and we have to head lower, because I think we're already expecting that it's going to reopen. We know the numbers are tight, and those calves are going to come anyway. The South is tighter on numbers. They'll be ready for them. It's not going to overwhelm the market when we have some new feeders coming in my opinion.
Yeah, especially up in the North, we should be okay, I would think. The hog market, correcting just a little bit here today. It seems like with the funds record long, every pullback kind of gets bought. Are the funds going to continue to defend their long here or not?
Yeah, I wish they'd tell me, because that's been the story. The funds are, record long in that market, and have got it to levels a lot higher than we all probably thought. In the production side, it feels like all of us, working in the hog industry, just, kind of been making sure that we're protecting this, and feels like we're all short and the funds are long, and it's just kind of that arm wrestling back and forth there. But yeah, today we've got the cash, the cutout getting a little bit sloppier, and a market that starts to slip. So would have to see some more chart damage before those funds really shake. They've proven how strong that they are, that they do want to defend, and I think that's what we're all waiting for. They're going to kick the leg finally. We all feels like we're all kind of geared up for that, but has not happened yet. Got some of those next summer months over 100. I think there was maybe some thoughts that that's just a little too early to get those kind of prices. But keeping your ear to the ground, hearing for purrs. Just kind of heard a little chatter about that yesterday. So we'll see if that kind of wants to enter the market at all as well. But tariffs as well. Hogs are going to be right in the bullseye of that if we start doing some tariff wars with Mexico and China. I mean, two of the biggest customers, a market that lives on really needs the export business. I'm surprised they're not really alarmed by that yet. They at least haven't even acted like it, in my opinion.
No, I've been surprised with that as well. It's over 25% of our total production in any given year, so it should be impacted. Okay, corn market, we were talking about charts. We got above 435 here on the March. I think that's above the 20-day moving average right now. But can we close above that? And if we do, what's the next upside?
Yeah, the upside, and unfortunately, has been very limited in these greens. I mean, it's been if you're one of those traders that's trying to make a few cents here and there, that's been really hard in this kind of market. It pokes its head above the moving averages. It looks like March can get to about 442. That's the top side of the range. Here we sit at 437. Well, bottom side about 427. So it's a 15-cent range that we're stuck in. Pretty slow. Now the things that corn has going, it's got some great demand. I think our exports have been good, a little bit better than expected with the strong dollar that we have. I'm glad to see that hanging on, and some of the spaces narrowed up quicker than I expected right after harvest. So the demand's kind of holding it on. That's why we can sit here at 4.25 and not 375, because it's not ready to kick the bucket yet, because there is quite a need for it. So I don't think anybody's in a rush to try to get some ownership. I don't think that the big topside blowout is going to happen. I think there's just too many other factors that are going to keep it reined in. So for me, we're just range bound. Yep, happy to see it go above the moving averages. And I think in a normal time, I would start to feel a little bit more confident, but I just can't get myself to feel like this is something a guy's going to have to chase at all.
Right. Well, demand and exports have been very good. We'll see if we get an adjustment on the WASD on Tuesday. Maybe is the market anticipating that a little bit? Or
yeah, we've got some potential cuts in some of these ending stocks, and I think that's been part of the reason we're holding and then rallying a little bit. There's just that's going to be part of it. I think the biggest overhanging factors is we're looking at South America and we're looking at tariff wars. We know that those are potential coming, and black eyes for the market. So not going to be able to get much steam behind it. The funds are more long corn than I thought they would be, but it's the soybeans that have I'm a little bit more nervous about that, I guess I'll say, because with what the market's thinking is adequate moisture in South America right now. That's what's penciled into the market, and it's going to be a monster crop, another record for them. That would be the camp that I would be in, and then you're going to throw tariff wars on top of it. I'm more worried about the downside on these markets than I am the upside, but luckily we're entering this. We've been through 4 years of seeing what the next president can do. So maybe it's not going to be near as much of a shock. It was a little bit more of a shock last time, but I think we're kind of ready for it, and we're already at low prices. So maybe it's not a disaster low price. Maybe more of the sideways kind of trade.
Okay. So yesterday's pop in the soybeans, a lot of rumors about China coming in and buying. And so when we don't get confirmation, we kind of go down the other direction, don't we?
Yeah, it has one day up and then it just kind of takes it right back and doesn't go
right. We can't put 2 days together back to back higher in the soybean market.
Yeah, and soybean meal sitting right down here on contract lows again, not finding much traction there.
Soybean oil has been supportive though, has it not?
That has been the one little shining light there that's kind of keeping something moving higher, but not much traction from that either, I guess.
You're kind of bearish those beans, that's for darn sure. All right, thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.